Welcome to China Tech Talk, the weekly podcast about startups and technology here in China. I'm John Artman, editor-in-chief of TechNode, and as always, I'm joined by Matthew Brennan, founder of China Channel. So this week we talk with Neil Woodfine, who is a founding member of Remitsy, about blockchain, Bitcoin, and ICOs, which are blowing up these days.
Yeah, they certainly are. It's a super hot topic. Certainly not my kettle of fish. I can't profess to be an expert in this area at all, but online, across China, it's very, very clear that there's a lot going on right now, a lot. I mean, we're both in some WeChat groups, I think, where the conversation is blowing up. And so it's fortunate timing that we have Neil on the podcast. I've known Neil for quite some time, and we've had this lined up for a bit. So really timely topic, and very China relevant as well. I think there's a lot going on with this technology in China. We cover that more towards the end about what the landscape is like here for these technologies, and there's a lot happening here with mining, a lot happening here with producing technology. And actually, Neil, his I don't know what you feel, John, but Neil's opinions here, he's quite unorthodox actually. The guy has deep knowledge, and he runs the Bitcoin meetup here in Beijing for quite some time now. But his opinions are certainly, I think, a little bit left field, we could say, but in a good way. I think he's able to argue his point very, very well.
Yeah, I agree. And then that's the thing. So for myself, I've just recently got into blockchain, started doing some research. I've heard about Bitcoin for many years now, and even covered it when it was a lot cheaper than it is now. But the thing is, to me, I mean, I think that there's a lot of right now with the ICOs, it's all about speculation, and I think that Neil does a good job of kind of explaining why that might be a problem. And there's not much discussion, of in the WeChat groups that I'm a part of. There's not much discussion of, what the actual application of these protocols are, how they're going to be used. All the discussion is about, how much is it worth? Is it going up? Is it going down? And so I think for myself, and I think that for Neil as well, this is actually very problematic. I think Neil and I probably differ in the sense that I think there's a bit more promise to some of these protocols potentially, but I'll leave our listeners to make a decision for themselves as they listen to this episode. And with that, we give you Neil Woodfine. Well, Neil, thank you so much for taking the time to come on the show today.
Great. Yes, thanks very much. It's a pleasure to be on the show.
So one of the first questions that we like to ask all of our guests is, what's your China story? Tell us, how did you get here, and what have you been doing?
So I first came to China in 2004 on a gap year with an organization called Project Trust. And they sent me all the way to Xinjiang to teach English. So I was there for 1 year teaching English. I enjoyed myself a lot. And during the year, I learned a lot of Chinese and saw a lot of China, and decided that it was probably a country of the future. Things were developing super fast in the business world, and it would probably be a good decision to study Chinese for the future. So I applied to Leeds University and got a place there, and then went to Leeds to study Chinese. So I was at Leeds Uni for 4 years. After graduating from there, I dove straight into the manufacturing industry. I started at a fine dispersion machinery factory. That was a really amazing experience, a baptism of fire of sorts. I was kind of thrown in at the deep end for a Sino-British joint venture. And then over the next 5 years, I worked in a number of different manufacturing companies. I did some laminate flooring for a while, activated carbon, and then finally was working at a cement consultancy, a British cement consultancy working in Nanjing. To be honest, I had a lot of spare time while I was working there, and one of my friends sent through an article on Bitcoin, and I'd never invested in anything at all by that point. I'd never owned any stocks or shares. But I saw the graph was kind of creeping upwards, and I thought it'd be fun to buy some. I was always kind of a little bit interested in technology and a little bit geeky. So I purchased them. I think the price back then was $189, $192. And then within about, I think it was like 3 or 4 days of purchasing them, this was just before the 2013 rally, the price just started exploding. And I think the price went from around $200 to, I think it was $1,200 at Mt. Gox. And during this time, I think it was over the course of about 1 month, 2 months, I was getting increasingly excited. I made this amazing investment and it was continuously going up. And I just started reading online with all this spare time a lot about what Bitcoin was, what it meant, why it was interesting. And by the time the price started crashing, I think it was in December, I was already completely hooked. And I wasn't particularly concerned by the fact that the price was racing towards the price that I bought in at. I was completely convinced that it was kind of one of the most important inventions we've come up with, and it would have a lot of kind of ramifications for the future. So I mean, I continued doing research on the side and kind of playing around with Bitcoin for a bit, but basically came to the conclusion that I had to get into the industry at any cost. It was a very early new industry. I didn't have any experience in the tech industry whatsoever, but I figured that nobody really understands Bitcoin or has much experience in Bitcoin. So it was a perfect time to get involved. So I basically applied to OKCoin, which is the biggest Bitcoin exchange in China. Got accepted, and then started working at OKCoin, and I worked there for a year. It was an amazing experience. As you can imagine, like although Bitcoin was kind of on a bit of a downer during that year, there was still kind of a lot of activity. I got connected with all of the major Bitcoin businesses which were trading on the exchange. I got to see how the inside of an exchange works. And then also I met some amazing people, my colleagues there. We had a really, really great team there. And one of the guys that I became very good friends with, Richard Bensberg, later left OKCoin to start a company called Remitsy, and invited me along after I'd left. He basically asked me if I wanted to get involved, and it sounded like a really exciting opportunity to use Bitcoin to solve real world problems rather than creating a company to solve other Bitcoin companies' problems.
Yeah, and it's interesting. Sorry to interrupt, but I just want to go back because so I think the price of one Bitcoin is over 3,000 USD at this point. Is that correct? Like 3,500 or something.
Yeah, no, I mean it's crashed a bit today, I think. So we're about 3,200, 3,300.
But still, I mean, like buying in at how much did you buy in at? Like 150?
190, around $190.
Yeah, 190. I remember when I first started covering Bitcoin, and it just very much like look at this crazy phenomenon. I think at that point it was selling, it was like $10 or something like that when I first heard about it. And it's just amazing to me to see like how much more mainstream it's become, but then how much more blockchain in general has become even after that. And so like this crazy volatility with Bitcoin, and we can talk about other cryptocurrencies later, but this crazy volatility just really doesn't seem to have discouraged a lot of the trading, it would seem.
Yeah, absolutely. And as well, I think when people talk about volatility, they probably have too high a time preference. What they're looking at is kind of the short-term kind of spikes and the dips. But actually, if you look at the long-term trend of Bitcoin, it's only going in one direction. And I think people have to kind of think more about why that might be happening, and kind of what the potential for Bitcoin is going forward. But then at the same time as well, I think people perhaps focus way too much on the speculation without actually thinking about the ideology or the technology that goes behind Bitcoin. And I think they're just as important. And perhaps people that buy in just for the speculation, I think maybe missing out on a lot of the other kind of advantages of Bitcoin. I think more people need to build solutions using Bitcoin that allow us to solve kind of everyday issues, basically.
So before we get really kind of too deep into the weeds about Bitcoin and applications and other cryptocurrencies, so tell us about Remitsy. What was the business, and tell us about your recent acquisition.
Yeah, so Remitsy was a cross-border payment platform. You could think of it a bit like TransferWise, or to some extent PayPal. So it allowed businesses outside of China to make payments into China. Basically, they were making payments for things such as manufacturing, but also services, people paying freelancers in China, software development, quality control, legal services, that kind of thing. And in fact, all other payment companies use traditional rails. So they're making payments through the SWIFT network. And everybody is basically licensing bank backends to provide their services. And that includes companies like TransferWise, whereas we were taking a completely different route and using Bitcoin to complete the cross-border element of these payments. So to put it as simply as possible, it's actually a lot more complex. If we had a client in the US making a payment to China, they would send us their US dollars. We would buy Bitcoin with those US dollars, send the Bitcoin to China, sell the Bitcoin, and we'd have renminbi, and we deliver the renminbi to the recipient in China. And that's putting it as simply as possible.
Well, that's really interesting. But I mean, what was the business model for you guys? I mean, make a service fee, making money on the float, or what?
So we really liked what TransferWise had done in promoting the mid-market rate, what they call the real exchange rate. And we felt like that was the future of the industry. So for all of our conversions, we always used the mid-market rate, and that's continued at Wire too. And then in addition to that, we would charge a 1% fee, and that 1% fee would be very explicit. It would be shown on all of our sites calculators, and all of the transaction history that we showed the client. And we wouldn't take any other fees, so there wouldn't be any send fees or receive fees. And that just makes it really easy for the client to know exactly how much their payments are costing. One of the problems with the payment industry, it doesn't matter whether you're making a payment through a bank or through PayPal or any of the other third-party payment providers, it's very difficult to actually know how much your payments are costing. And if you ask most business owners, they don't actually know this figure, despite the fact that they know exactly how much money they spent on paper clips and pencils in the last year. They can't put an exact figure on how much they spent on payments. So we felt like we could make a big difference in changing that.
Interesting. So then, yeah. What about Wire? So now, Remitsy, what was it in April, I believe? Wire completed the acquisition of Remitsy. So tell us about that. And so is Wire basically doing like the same kind of business?
That's right. So Wire were one of our competitors. They had been focusing on more markets than us, so we'd been entirely China focused. And to be honest, Richard and I, it was our first rodeo. It was our first ever startup that we'd set up ourselves. And I think there's a lot of things we would have done differently. We achieved a lot during the year and a half, but perhaps hadn't grown as fast as we would have liked. We were looking into fundraising, but then I think we kind of recognized that even if we raised funds, we were still on the back foot compared to some of the competitors, particularly Wire. And then we started investigating acquisitions, basically, and we respected Wire a lot. We saw what they were doing and thought it looked really good. They were our first choice. We reached out, and immediately the two teams clicked, and the rest is history. I think the entire deal was wrapped up in about 2 months. It was like a perfect fit as well, because Wire were setting up their China office, they'd expanded so quickly, they realized that they needed a presence in China. A lot of their business was going through there. And so that made us a perfect candidate for filling that role, basically. And we've kind of introduced all of our clients and all of our experience in working in the China market. So it's worked out really well.
Yeah, I imagine there's a lot of synergy there, because they can kind of bring in they're offering their worldwide clients a bit an access channel into China, and you can offer your clients a broader market.
Yeah, I mean, to be clear, why we're already killing it in the Chinese market. They were doing very well. But I think because they were based out of the US, there's obviously a lot of challenges there. Very few of the staff there had ever lived in China. And I think there was a lot of kind of value that we could add there.
Yeah, that's great. Well, cool. So, we're not really here to talk too much about your company. What we're really here to talk about more is blockchain, Bitcoin, cryptocurrencies. Globally speaking, looking at some broader trends, but also here in China. So, I guess, I mean, I think that this is one of those topics where I think a lot of people have, at this point, if you're in technology, you've probably heard a lot of these words. But you may not necessarily be too familiar with what they mean and kind of how they're different. So, let's take a look at just some basic words, some basic vocabulary, I would say. So, like blockchain, Bitcoin, cryptocurrency, Ethereum, like what are they and how are they different?
Okay, so I think you're not alone, and I think most people are in this boat, that they are familiar with these terms and yet don't have a very deep understanding of it. And what that's led to is a lot of misleading information in the media and online, in blogs, on Medium. Basically there's a lot of people that are completely misunderstanding the implications of the technology. I think of those items that you mentioned, I'm going to change the order a bit. I think Bitcoin is probably the best thing to start with, because it was the originator of all these ideas: blockchain, cryptocurrency, Ethereum. But essentially, it was designed as a digital cash without any third parties, without any trusted third parties specifically, and it was founded out of kind of cypherpunk communities with a kind of a sprinkling of some libertarian principles. And essentially, what it does is create the appearance of digital scarcity. It provides us a digital cash which we can use online for transactions, which just completely hadn't existed before. Everything else had been reliant on bank accounts and trusted third parties. So Bitcoin is not just blockchain, it's the sum of its parts. And it's a combination of many different technologies that go into making it. Blockchain is one part of that. Another part is proof of work. It also heavily relies on cryptography. And it relies on all of these different elements to basically produce this digital currency. Now, recently, there's been a lot of hype about blockchain. I think, actually, that's starting to die down. If you follow articles in the media on this, I think people are hyping blockchain a lot less. I think the biggest misunderstanding about blockchain is that it's fairly worthless on its own. Now, I know there's probably a lot of listeners out there that will probably disagree with me on this, but bear with me. I think at the moment, if you look at the proponents for blockchain, it's mostly being pushed by banks, governments, the media, and these are all entities who've been telling us for the last 8 years that Bitcoin is worthless, that it's about to die, that it has all of these problems. So I think you have to take anything that's being generated from these organizations with a pinch of salt. And I think blockchain is now being used way too broadly. For example, a lot of people are starting to define DLT technology, decentralized ledger technology, as blockchain, when it's not. It's quite significantly different. And I think what it's being used for is an umbrella term for these very old, slow-moving organizations to finally start paying attention to technology and using technology and databases and stuff like that to solve these efficiency problems that they've just been allowing to fester for many years.
Well, so that's interesting because I mean, like, I think so. Like, as you mentioned, some larger financial organizations are looking into using blockchain, and so I guess can explain that a little bit. So, what's the difference between a distributed ledger table and a blockchain application, or just the blockchain in general?
So, a distributed ledger is essentially just a database which is distributed across multiple entities, and they all have write access via some private key or whatever, and basically it allows them to update. I think actually you can think of it a little bit like a Google Sheet, despite the fact that a Google Sheet is held on a centralized server. You only need to decentralize that across multiple different parties. A blockchain specifically is stringing a number of blocks containing transaction data together. And if you follow any of these banking projects, you'll look at them more closely, you'll find that they've discovered that using blocks chained together is not particularly efficient, completely unnecessary. And then they've started to promote this brand new word, which didn't exist before Bitcoin, which is called DLT. Now, DLT has been possible for God knows how long, like 10, 20 years, via just traditional database technology. You can distribute a database across multiple different parties. So, I mean, if it's been around for so long, you have to start to question why it's considered such an amazing innovation right now, when really nothing new has been achieved. I think as well, like just to like redefine define blockchain a little bit better in a Bitcoin context. So the idea of stringing these blocks together was purely just a solution to the double spend problem. So previous to Bitcoin, there'd been attempts to create digital currencies, like there's tons of them, Liberty Reserve, BitGold, a bunch of other predecessors. But each one had failed because they had this trusted party problem, the double spend problem, which meant they needed a trusted party. So in the double spend problem, if I have one coin, we have to be able to verify that I haven't sent that same coin to two different recipients. And we have to decide which recipient actually received the coin. Now, the only way to do that prior to Bitcoin was to have some form of centralized third party or federated third party, which decides, okay, this coin went there. Now, the problem with that is the centralized third party has way too much power. They now can they have way too much power to manipulate things like money supply or generate to create fraud.
Well, basically, you're talking about central banks, right?
No, so I'm talking about like previous attempts to create digital cash, digital currency. Okay. So things like Liberty Reserve, BitGold. Another problem with having this trusted third party is it is threatened by other third parties. So, for example, Liberty Reserve was closed down by the government, and it creates a target for attackers to shut it down. So Bitcoin, its solution to this problem was to remove all the third parties via blockchain and proof of work. And without proof of work, blockchain, again, is fairly meaningless. The only reason blocks are used in proof of work is to package up transactions into blocks to apply the proof of work to. Otherwise, what you would have to do is proof of work every single individual transaction in every single consecutive transaction in one string, and that would be completely inefficient. It would be really, really impractical. It would be very difficult to achieve. So what you do is you package them in blocks and then apply the proof of work block by block. When you remove the proof of work, which is what all of these blockchain projects are doing, you have to ask yourself why you're stringing the blocks together. And they have started to ask themselves that question, and hence you've started to get this DLT where they just remove the entire block thing and just retain the distribution of the database element. I think perhaps like just to make it as simple as possible, to use an analogy, it's a bit like we've now invented the blog, but then still trying to write your blog in pages. So pages are a way to create a book in physical form out of paper. But when you've got a blog, what's the point in making it in pages? So for all these banks and financial establishments, they should just be using a database because they have their own trusted third parties. They don't need this federation of trust, this decentralization of trust. They can just get away with a database without those blocks.
Yeah, I think that's the main point. I've been doing some research on Bitcoin and blockchain recently, and reading this book by Don Tapscott, The Blockchain Revolution, and he's talking a lot about how like governments and banks and other corporate organizations are trying to look at how to apply blockchain, and it's just to me it does feel slightly counterintuitive because blockchain is all about decentralization. It's all about being able to without knowing who the person is on the other side, without having to have any actual trust, I can transact with them, whether it's currency, whether it's services, whether it's files or something like that. And so it does seem kind of odd to hear that these larger organizations are looking at blockchain applications.
Yeah, and as well, I mean, just for anybody that approaches me with these ideas, my first question is, why can a database not solve your problem? They'll say things like transparency. You can make a transparent database. I mean, you can completely open it up and allow anybody to inspect it, copy it, record it. So, I mean, that's completely possible with a database. Immutability, you can achieve that by just hashing the database state to a public blockchain, or even just hashing it to Twitter. I think you could achieve plenty of immutability that way. I don't think blockchain really adds anything in these applications.
To me, it really does seem that that blockchain, the real potential, and we're going to talk about ICOs and things like that in a little bit, but the real potential of the blockchain is creating, protocols for decentralized transactions, and so it's been proposed that whereas like the internet was these thin protocols, so TCP/IP protocols and other ways of guaranteeing transfer of information. So these were thin protocols, and so they're very simple. They're made to be redundant. They're made to ensure that data is actually goes to where it's supposed to go. And then we have all these applications built on top of that. So like with a lot of capabilities, and with a lot of complexity. But now with blockchain, there are some people proposing that we should be looking at it like the mirror version of internet technology, where we have these fat protocols that are fairly complex, that take quite a bit of maintenance, but then on top of those are these thin applications, which are very, very simple and are there just to make sure that we can transact in data or currency or what have you. So do you agree with that? What's your take?
I fully don't understand this point of view whatsoever. I think it sounds really great, but nobody can really describe what problems it's solving. I think the most important, I mean, this gets into the question of ICOs, I mean, or kind of any altcoin system. Why do any of these protocols need their own token? And at the end of the day, it looks like the only reason to have its own token is to fundraise for the founders creating the protocol. But then that carries all sorts of other moral hazard and other kind of economic issues that I think just can't be answered sufficiently. I mean, if you're going to create a protocol, why would you want to create barriers to entry by forcing people to buy a token that has a fluctuating exchange rate to be able to interact with that protocol. The whole point of a protocol or for a successful protocol at least, is for it to be open, accessible, and to have as little friction as possible. I don't think it's a smart move to require people to purchase a small amount or a large amount of a particular token just for their usage on this particular platform. And I mean, another big question is, why can none of these protocols be achieved through Bitcoin? I mean, let's ignore the fact that most of them don't need a transaction medium whatsoever. They can achieve their goals without a transaction medium. But let's say they require it. Why can it not be achieved with Bitcoin? So we know that sidechains are on the way. We can create sidechains, which means that basically you can create an entirely new blockchain and leverage Bitcoin's reliable store of value to create new tokens on this new platform and use those to transact. And now if you've got that, you completely mitigate any of that friction, because now let's assume everybody holds some Bitcoin as a store of value. It allows you to transfer between these different systems using this very reliable store of value without having to think about exchange rates, without having to engage with exchanges, and without having to kind of damage cash flow, hold up a bunch of funds just to be able to use any particular protocol. And then as well, like look at any of them. I mean, I recommend anybody looks at any of these projects more closely and question why at all it needs its own token or any token whatsoever. Like, why can this not be achieved in like a similar kind of way as BitTorrent, for example, which is a completely distributed platform, distributed piece of software that has zero tokens involved. And as well, like, I mean, I think BitTorrent is an excellent example, because imagine how powerful it could become if you incorporated Bitcoin and basically rewarded users for sharing content, and certain content could have like higher values or lower values associated to it. And that kind of like, I think is a really kind of exciting prospect, whereas any of these other ICO projects, I'm kind of wrapping it all up in ICOs. I think some people have just created tokens without doing an ICO, but I don't think, I think in general, just none of it makes any sense.
But what about the distribution problem? Because like with Bitcoin, distribution was created by, just by mining Bitcoin, out of thin air. I mean, obviously, you have to have a rig, you have to have, some pretty powerful processing juice behind you, and we can talk about maybe some of the Bitcoin mines here in China, but with a lot of these other blockchain platforms, I mean, how do you distribute tokens because they're not using a proof of work system, right?
I think a lot of them are using proof of work or proof of stake, but I just think that distribution is not an excuse to launch an ICO, and I think it's almost a little bit of a hilarious excuse, actually, in that it enriches the founders at the same time. Seems like almost a bit of a too convenient excuse to distribute your tokens while enriching yourself, basically. And as well, I mean, Bitcoin did manage to achieve quite wide distribution. I think it's got a fairer distribution than many of the other tokens. And why does distribution matter when most of the people that these coins are distributed to are likely never going to interact with the platform that they are funding or supporting? I mean, a lot of these platforms have very, very niche use cases. Why would you need a token for a smart contract platform, for example? Do you have any plans to use a smart contract platform? Probably not.
But one of the technologies that has taken off outside of Bitcoin is Ethereum. Can you just talk a little bit about that? Explain that for the audience, who perhaps you give them the basics.
Okay, so I mean, Ethereum is different from Bitcoin in almost every way. And I think Ethereum proponents would agree that it is very different and has different goals in mind. So Bitcoin has a very clear mission. It's aiming to create digital sound money that's outside of the influence of governments, banks, corporations, basically anyone. Whereas Ethereum's mission, I mean, personally, I still think it's difficult to say. Nobody's ever really given me a good answer to it. I mean, is it going to be the best smart contract platform, the only smart contract platform, the most general smart contract platform? And what are the smart contracts going to be used for? Is another question that nobody can ever answer for me.
So that's what it's about, smart contracts.
Sorry, yes. Basically, that's the meme, the story, is that Ethereum is a platform for building smart contracts. Basically, what they've done is create a much more flexible language for developers to create smart contracts. You can also create smart contracts on Bitcoin, but the scripting language is very, very limited. It prevents you from creating very kind of complex smart contracts, and also increases the cost of doing any complex smart contracts, whereas Ethereum allows you to do very complex ones. It advertises itself as Turing complete, which essentially means that you can create any program you want. But then that also creates a whole host of issues for Ethereum, in that you can create super complex smart contracts that hold up the system, can break the system, and cause all sorts of potential scaling issues if people actually start using it for any real applications. And that's the point. I mean, Ethereum's been around for a while, and yet still there are no kind of marketable solutions out there. And if you speak to any Ethereum fan, they'll always tell you that they're just around the corner and things are being worked out. But I don't think we've seen anything even close to a real application for Ethereum.
But yet it's gained traction, hasn't it? I mean, it's going quite well in terms of it's also.
Well, I mean, when people talk about it, it's got traction. It's all they're talking about is PR pieces pumped out from various different startups and banks and government organizations. Just PR pieces. Like, if you actually investigate these projects more closely, there's not really much activity. There's nobody actually using it. And yeah, the price is pumping, but I mean, like, what does that represent? I mean, there's 1,000 altcoins out there and they all have value. Does that mean each one is like solving a problem? Not necessarily. It could be just the fact that everybody's being suckered into buying some Ethereum and believing in the kind of dreams that are being sold by the founders and other Ethereum investors. I don't think it's fair to say that it's got traction when there isn't any evidence of it being used in any useful way to solve any problems that couldn't be solved better with either a database or other software or Bitcoin.
Well, I think it's interesting because you're talking about applications and things like that, and how there's like the use cases just aren't either, they're not very obvious or no one's really using them so far. But I mean, similar things were said about Bitcoin when it first came out and when it first started to get a lot of public attention.
So this is something that I worry about quite regularly, because I think I'm turning into a bit of a troll when it comes to Ethereum, ICOs, blockchain. And I worry that I'm that guy that was constantly kind of criticizing Bitcoin and explaining why it wouldn't work. But I think actually, at least with Bitcoin, you can state very clearly what its goals are, and you can look at empirical evidence that it's working. It is becoming a store of value. It's being used increasingly for transactions, and the technology is developing very fast and becoming more and more useful as a transaction medium. Whereas Ethereum, I think the opposite, that we can't actually point to any evidence of it being used. The more it is used, the more problems it has when it comes to scaling. And also none of us, all three of us, none of us can define exactly what Ethereum will be used for or should be used for. There's always just kind of this very kind of vague references to kind of replacing contracts in the real world. I think actually what Ethereum is being used for more than anything these days, and some people even call it a killer app, is the creation of more tokens. So what we have is a token that's used to create more tokens. And it's just kind of this like layers and layers of potential scams. And as well, what you even get like projects which are built for creating tokens, which are built on Ethereum. So you can even go three layers deep. And nobody's using any of these tokens. Nobody can really explain properly what they're used for, and yet people are buying and selling them. So, I think people will have to do a much better job of describing to me what this new platform, this new phenomenon could be used for, because so far I'm completely unconvinced.
Well, don't things it draws very, very sort of deep questions about what is valuable and why, that these are very basic economic questions, right?
Right.
Perhaps it has value because people perceive value in it, and that's all something needs to actually have value.
I completely agree with this, and I think this is one of the major problems with the industry. You get a lot of people defining themselves as blockchain experts or blockchain investors, and they're kind of diving into the industry, and they fully haven't investigated or understood or researched the ideology that went behind making Bitcoin. Like, you cannot understand what any of this is about without kind of like diving in on things like monetary theory and Austrian economics. Like, all of this will not make sense, and you will come up with a lot of nonsense unless you understand some of those fundamental values. And I think that kind of like accusation could be leveled at most people involved in the industry. A lot of people still are kind of grasping for what value is and what the point of Bitcoin and a blockchain is. And I think most people still aren't there yet. People just feel like you can just ignore that and just like carry forward and just build the technology. But I completely disagree. I think you actually have to understand some of these fundamentals before you can go ahead and start building some of these, either building new platforms based on cryptocurrency blockchain technology, or building businesses built on Bitcoin. I think without achieving any of this understanding, or even wanting to achieve any of this understanding, you're going to make a lot of mistakes.
It seems so much of it is just people wanting to make a quick buck with speculation. But anyway, we go into more of that stuff later on. I just want to bring the conversation back now to China. We're a China-focused podcast, and we haven't actually talked much about China so far, have we? It's been mostly sort of general stuff, but we're all here. And so let's talk about what is the landscape in China. What's happening here with Bitcoin and blockchain, broadly speaking.
So it's massive here, perhaps more than anywhere else in the world. Certainly comparable to the US. I think all I can do is generalize, because every individual's drive is completely different. But I think in general, in China, there's a lot less ideology involved. So far less kind of discussions about the role of the state and kind of monetary theory and central banking and problems like that, and far more pragmatism here. So everybody's far more focused on making money and building kind of applications and businesses that allow them to kind of profit off this kind of thing that's happening right now. So China has like completely killed it. We're just like focusing on Bitcoin. It's completely killed it in certain fields. They have dominated the manufacturing of mining equipment. They are the number one. There's one main company, Bitmain, and basically everybody across the world buys from them. Nobody can really compare. And then also for actual like mining operations, China is also doing amazingly there. I think like 60-70% of the hash rate is all generated in mines in China. And a lot of that is thanks to kind of old government policies that created disused hydro stations right around the country that basically are generating electricity that's being lost and not put into the energy networks. So a lot of these miners are leveraging that cheap electricity. And then also geographically, China's quite suited. If you're going to mine Bitcoin, you want to be in cold regions. Hence, a lot of people are mining in places like Xinjiang and Mongolia in the northeast of China, because you can achieve quite low temperatures there. And cooling is one of the most expensive things you can do in a mining operation. And then also in Bitcoin exchanges, China's doing amazing. Like, it has 3 major exchanges, all of them kind of rank in the top 10 in the world. And that's OKCoin, Huobi, and BTCC. And they're all doing super well, really big volumes, great liquidity, professional service, and lots of like kind of cool features and products that are perhaps not available in more regulated regions like US and the UK. And then more broadly, I think, like we mentioned blockchain before, it's actually coming to mean just like the broader industry, in which case, like, I think it's not a huge problem. But like blockchain was definitely a huge thing last year. I think China's perhaps a little bit behind the US and elsewhere in that it's still kind of beating the blockchain drum. And I think that will die down over the next few years. And then ICOs are going like totally crazy here. Any kind of like altcoin speculation, but particularly ICOs. Just like, I'm in a number of WeChat groups, and there's just a new one posted in every single day. I think like there's a lot of engineering teams which are kind of pumping out white papers and great sounding stories and bold claims, and then using that to basically crowdsource stupidity, hide behind like kind of the opacity of the technology, and make a lot of money from small investors on a large scale.
Yeah,
ICO is an initial coin offering, right? So if you can just briefly explain that, I think.
Sorry, yeah, we've mentioned it quite a few times. So ICO, I want to say it's a new concept. I think it's not really true. The first ICO was Ethereum, I think. And I think it's only really been popularized in the last maybe 6 months, 1 year. And essentially, instead of the old altcoin model, which was to just basically announce that you were going to release your software to miners, and then allow them to start mining it from zero, from the Genesis block, with nobody owning any coins. The ICO model is to basically announce that you're going to release the software, but at the same time offer kind of an initial batch of coins to anybody that wants to purchase them for Bitcoin or for Ethereum. And it's a little bit like an IPO, but not quite. And then basically just all of these small and large investors will throw Bitcoin or Ethereum at the founders and purchase tokens, with the idea that if this platform is successful and is used a lot, then basically the value of the tokens will increase because there'll be more demand. But when you inspect it more closely, there's a lot of problems with these claims. So one thing that I like to say about ICOs is that they're broken at best, or at least the model is broken at best, and malicious at worst. And I think actually the latter applies to more projects than others. So I think, I mean, if you basically, I've mentioned it a few times already. I think everybody needs to examine each one of these projects more closely, and realize there's a host of contradictions in what it is they're proposing. Nobody can be very clear whether the projects they're investing in, and I use the term investment loosely, are a protocol or a company. And I think both have very different propositions. And another huge issue is that there are zero protections for you when you're purchasing this kind of, it's very similar to security. Some people say it's not security, some people say it is. But basically, you don't have any contract or any anything you can do if somebody doesn't follow through on the claims that they're making. So in the traditional world, if you purchase a stock or a share, and the company doesn't deliver or has misled you, then you have the courts and other means to kind of try and reclaim some of the funds. Whereas that completely doesn't apply to ICOs. And actually, if you look at the terms and conditions for some of these most successful ICOs, they completely absolve themselves from any responsibility whatsoever. And you have to ask yourself, why are they putting that in their terms and conditions? I mean, the simple answer is because all of these founders only want to get rich quick. They're not actually interested in following through and producing like actually useful platforms and increasing the value of the coins for the people that have invested in them.
Taking a step back for a second, and I mean, I think that I've heard some stories in particular here in China where people have lost quite a bit of money on via investing in ICOs and didn't pan out, or they chose to sell at the wrong time or something like that. And so I think that there's no guarantee. And the U.S. federal government is looking more into these. Filecoin, for example, they were about to do their ICO, and they wanted to then, but they limited it. They wanted to limit it only to accredited investors and to so people who have an income or assets above a certain amount according to U.S. law. And they've been kind of back and forth, and so it seems like they're actually, some people are saying that they've kind of bungled their ICO, kind of going back and forth, but it does seem that they're trying to stay above board when it comes to following U.S. regulations, since they are based in the U.S. But I want to look a little bit beyond some of the I guess the real world problem.
Can I just jump in? Yeah, I mean, just looking at that issue there, it kind of reveals the complete kind of pointlessness of doing these ICOs and the kind of the intellectual bankruptcy of this entire model. If you have a regulator regulating the sale of these coins, then immediately you have a trusted third party, and the whole point of having a blockchain doesn't make sense. If you have a P2P token, which you can trade with anybody at any time, how can you have a regulator get involved in that? It's just not possible. Now, like, if Filecoin decide to release their coin only to accredited investors, and then the accredited investor sends his coins to non-accredited investors, are Filecoin liable for that? What happens? It doesn't make, none of it makes any sense whatsoever. Like, if Filecoin can be liable for that, for allowing their coins to get into the hands of non-accredited investors, then you immediately again have another third-party issue. So let's say the SEC clamps down and puts all the Filecoin founders in jail. Like, what happens to the protocol? Everybody loses their money. And as well, I mean, if any of these ideas were really that good, why can't they raise funds through traditional means? Like, they literally have zero product, zero customers. They ride on purely marketing materials, white papers, and bold claims. But I mean, nobody would ever invest in a project where you had zero product and zero customers.
Let's just leave ICOs behind for a second then, or just altogether perhaps. So I guess so. Yes, I mean, coming back to China. I mean, so we talked about how China has been really involved and perhaps one of the biggest players in Bitcoin, in to a certain degree blockchain. As well. So, there was an announcement, or there was a story by the MIT Technology Review a few months ago about how China is developing their own digital currency. And so I guess the big question here is number one, why are they doing it? And number two, is it really blockchain? Because the idea again about blockchain is that it's supposed to be decentralized, but it's hard for me to imagine the Chinese government creating a decentralized digital currency that they're not ultimately going to be able to control.
So I can say for certain it won't be a blockchain, even remotely resembling a blockchain. I think most governments around the world are all investigating creating their own digital currencies. I mean, to a certain extent, we all use digital currency in our daily lives, whether it's through Alipay, WeChat, or even our bank accounts. It's all just kind of ones and zeros in a computer, right? All protected by cryptography. So, I mean, depending on how you want to define cryptocurrency, you could even define them as that. I think what the Chinese government is essentially trying to do, along with the European governments, is create a central bank currency that is digital. And that has a lot more implications that I think people don't discuss. So your bank deposits are not central bank money and have all the risks that come with that. Whereas if you're holding central bank digital currency, that means you're holding like real renminbi, for example, and then your only trusted third party is the central bank. But then I think one of the main drivers behind this is it once the solution is completed, it allows them to completely phase out physical cash altogether, and then it locks basically everybody into the financial system of the establishment, and they can decide when to inflate, whose accounts to give haircuts to, whose accounts to close down, and it just gives them kind of unlimited authority and control over every individual, every company's finances. And I think initiatives like this will do nothing but accelerate the adoption of Bitcoin. And another thing to kind of bear in mind is that all government technology projects are generally absolute disasters. I think everybody can remember the rollout of 12306. Is it
Yes.
called?
Yeah, for the
train ticketing
tickets.
service.
Yeah.
I mean, that was really bad. It's got better recently, but it's still like clunky. It's inefficient. It's difficult to deal with. They close down for like 6 hours every night. I mean, why the servers need to go to sleep every night, I've got no idea. But I mean, you're going to be seeing similar problems from, and this is not just directed at China. This is a global problem. Like all, I mean, the UK's NHS database system was an absolute disaster too. So,
Well, a few different things here. So just to kind of reflect some of what you just said, to make sure that I understand. So basically, what you were saying with China's digital currency is that they'll create a parallel currency to the cash system, and they'll eventually phase out the cash based system. That's kind of the plan, at least.
Yes, and like I think as well, like it's not definitely going to happen that way. I mean, certainly Alipay and WeChat are kind of dominating, and if you imagine that the government releases a very subpar digital cash experience, I would find it very difficult to imagine consumers using this really clunky kind of digital cash app over their Alipay and their WeChat. So, I mean, exactly how it'll play out, I've got no idea. They may just give up, but I certainly think that's part of the intention.
So I guess, but that's the thing. I mean, because you look at some of the recent technology related initiatives from China, and in particular in strategic areas. I mean, like the thing is with 12306, I think that's a good example of a failure in creating a consumer focused platform. But on the other hand, making sure that people buying tickets have a good experience isn't necessarily of high strategic importance for the Chinese government, whereas increasing their ability, the increasing surveillance capabilities is. And you see more and more where, CCTV cameras are becoming much more, visible across the country. I think China is one of the most surveilled countries at this point. But then also how they're applying artificial intelligence and facial recognition to these surveillance technologies, and so this is security, policing, all sorts of different things that the government might want to do, with this surveillance system. It's strategic, and so I wonder if in a certain sense the digital currency is a strategic priority, which means that it actually might be better than one.
Totally. I mean, I'd be surprised if it was. I just don't think they have the engineering teams, the capabilities. They can't overcome the problems of bureaucracy. So I'd be surprised. I mean, I saw one document which was leaked. I can't verify the veracity of it, but basically, it was suggesting that everybody would have like this kind of government app for holding digital cash. And this would be like, I mean, cash and central bank digital currency, it's all central bank stuff. So you basically have to go to an ATM to collect it on your app. And I think it would be through like the scanning of some QR code or something. And you would have you would only be able to carry like a limited amount of this digital cash on your phone at any one time, a little bit like holding cash in your wallet. And then you would have to go back to an ATM. Now, like all of that is completely nonsensical because you're tying down the digital world to the physical world. And I think like we could expect solutions like that from whatever comes out. I mean, it's exactly the same for the 12306 thing. You've still got to go to those machines. If you're a foreigner, you've got to go and queue up at the counter. Like they've created a digital solution which is still completely physical. Doesn't make sense.
So yeah, I mean, and kind of looking, a little bit more at coming back to a little bit to Bitcoin. I mean, like, are there, and so with Bitcoin, a lot of the mining has been coming from China. So do you think there's an issue with Chinese miners kind of controlling so much of the Bitcoin or of the Bitcoin production?
So no. I think Bitcoin mining will just gravitate to wherever electricity is cheapest, and right now it's in China. I think a lot of the Chinese entrepreneurs that are running these mining farms, if they discover that electricity becomes cheaper elsewhere, they'll start moving their farms abroad. So I don't think that's a particular concern. I mean, I think the biggest concern in the industry at the moment is the fact that we have one manufacturer which everybody relies on, and whether he's wielding that power or not, whether the company is wielding that power or not, it means that in the future it could become a risk because the manufacturer can decide who receives the brand new mining equipment and who doesn't, and that kind of allows them to influence the decisions of their customers who are profiting from purchasing this equipment. That one's more of a concern. And as well, like miners have limited power. That's been proven very recently with the activation of SegWit. They can certainly delay upgrades to the system. They perhaps can veto, although I think that's kind of been proven not to be the case. But they definitely cannot implement their own changes as they want. For example, if they were all co-opted and decided to start implementing kind of surveillance protocols on Bitcoin, very quickly the user base would reject that, and they, either people would start ignoring whatever work the miners were produced, and then if the miners attacked the network, they would just change proof of work. So the miners are very kind of like limited in what it is they can do and how much they can influence the network. They certainly have influence. Let's not say that they have zero power whatsoever, but it's not kind of total.
So Neil, the last question that we like to ask all of our guests is, where can our listeners find you?
I'm quite active on Twitter, so I'd recommend anybody that wants to get in touch, add me on there. And my handle is N Woodfine. So that's the first letter of my first name and then my surname. And then also I run the Beijing Bitcoin Meetup. So if any of the listeners are in Beijing, just go to meetup.com and search for the Beijing Bitcoin Meetup. Get signed up. We do one event a month, and it'd be great to see you there.
Well, great. Well, Neil, thank you so much for taking the time to talk a little bit about yourself, Remitsy, Wire, and all the issues with Bitcoin, but then of course what's happening here in China. And to our listeners, if you could take the time to leave us a review on iTunes, or just hit that star button on Overcast, or hit on recommend on Pocket Cast, we would really appreciate it. It's a great way to show your support.